So Google is set to report earnings today after the market closes, and this is everything that you need to know about it. What's going on, guys? It's Ricky. I really hope that you learned something new, and if you do, please consider dropping a thumbs up and subscribing if you feel like we earned it. Now, let me go ahead and jump right into this, but I also want to remind you that I do plan to go live for Google's earning report. AMD is also going to be reporting earnings. If you want me to go live, all I literally ask you to do is get this video to over 1,000 likes. I just want to make sure enough people show up. So drop a thumbs up and don't forget to subscribe to turn on your post notifications. With that being said, Google, as of right now, if I'm not mistaken, is currently trading at a price of $168. It's become quite overbought on the day, but if I'm not mistaken, on the overall day chart, you can see that it went from highs of 191, we retraced to lows of 147, and we are currently trading at highs of 169. So the first question you must be asking is, okay, well, what is the market's expectation for Google reporting earnings today? So Wall Street has an expectation of $1.84 for the earnings per share and revenue to be $86.37 billion. Now, I cannot stress this enough. How many times have we talked about it's not just about the company exceeding expectation for earnings, but also exceeding expectation for guidance. Guidance is of what to come, right? The quarter that they're about to report earnings on is what has already happened. It's been Q3 of 2024. That's done. We're in Q4. So not only do investors want to see that we did well in Q3, but that we plan to do well in Q4 and in 2025. And that is what investors are going to be paying attention to. If you don't know what I'm talking about, look at Tesla as an example. Tesla and the overall reaction that it recently experienced when it gapped up, Tesla didn't have the best earnings. I mean, it missed overall revenue, but it hit earnings per share. Yet Tesla skyrocketed a total of like 26% within the next few days because its guidance was so good for 2025. That is what a stock needs to blow it out of the water, right? Not just good earnings, but good guidance. And when you look at what investors are paying attention to, again, I wanted to break this down for you. So the Google parent, which is Alphabet, is scheduled to report third quarterly earnings as the market closes on Tuesday. Analysts, again, they expect that they will post an adjusted $1.84 share earnings per share and an adjusted $86.37 billion in revenue. So this would be a jump of $1.55 per share when it comes down to revenue, and a revenue of $76.7 billion at the same period last year. So this is a jump, no question about it. Again, they want to see a year-over-year growth. One of the biggest metrics, and this is what I want to highlight. Let me go ahead and zoom in for you guys very quickly. So one of the biggest metrics investors will be watching in search is Wall Street's expectation for the company to report search revenue of $49.02 billion. Now, this is where it gets very specific. Every company is different. The big focus for Alphabet, which is known as Google, Alphabet's the mother company. The reason that they are looking at this like line item, this sector within Google, because Google is a massive company, right? It's huge. But the reason that they're paying so much attention to its search revenue is they want to see if Google still owns that marketplace. So the reason that this has become a concern is the franchise threatening a piece of its search and AI of what is going on and what is going to be doing or what is going to be happening with the business. So Google has been dominant when it comes down to the search engine for more than 2 decades. But the emergence of generative artificial intelligence has brought in new and more intense competition, which again, it has not been something that it had to compete with. So what they are trying to figure out is, does Google still own the marketplace? Because with companies investing billions of dollars, they want to make sure that Google is still growing and owns the marketplace. Because if they don't, then guess what? That is not good for Google, and therefore investors might want to start pulling and putting their money out elsewhere. So this has been a focus, and I actually really liked this quote that was said by one of their executives, and it says, the risk of underinvesting in AI, right, is dramatically greater than the risk of over-investing. And it's not just him that has said that. It was also Mark Zuckerberg that said the same kind of thing when he was being interviewed and asked about this $1 billion of money being invested into artificial intelligence. And it's a race of who's going to own that space. And they're investing heavily and maybe over-investing if we look back maybe 5 or 10 years from now. But nonetheless, they're doing it because they want to get ahead. They want a share of that marketplace because they see that potential. And that is exactly what the big focus is going to be when Google reports earnings. Not just that, yes, it exceeded expectation for earnings per share and for revenue, but also that this search engine revenue, what Google has been dominant in for the past 2 decades, that it still owns it. And again, that is an expectation of $49.02 billion. You guys have heard me say it many times before. I do not like to pretend like we can predict the future because we cannot, right? I'm here to watch the market react. And I think that whatever Google reports today will pretty much set the tone for the rest of big tech later this week. So I'm very excited to share this experience with you guys. I hope that you guys tune on into our live earnings session. And again, that will be hosted on our YouTube channel. And all you literally have to do is get this video to over 1,000 likes and make sure you subscribe to the channel. If you have any questions, feel free to comment down below, and I'll see you at market close for that live session. Take care, team.